Hey everyone, welcome back to Corporate Decoder. Today we're diving into Capital One's latest report, and believe me, after seeing these numbers related to debt and loans, I could use some capital myself. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. In this report, we are going to cover some interesting news from Capital One. Specifically, we're looking at what's happening with their loans. Are people paying them back, or is Capital One having to write them off? What does this mean for this giant financial company, and maybe more importantly, what does it tell us about the economy? Let's find out. This isn't a typical quarterly or annual report. This is a Form 8K, which companies use to quickly announce important events to investors. In this case, Capital One is sharing an update on their charge-off and delinquency rates as of the end of May. Charge-offs are basically debts that the company doesn't think they're going to get back, and delinquencies are loans where people are behind on their payments. These numbers can be a really important signal about how consumers are doing and the overall health of Capital One's loan portfolio. The company is furnishing the information in Exhibit 99 Year 2 monthly charge-off and delinquency metrics. That's what we want to see. Capital One is sharing a snapshot of how many loans they don't expect to be repaid and how many people are behind on their payments. These are key numbers to judge Capital One's financial trustworthiness. Okay, here we have a simple table containing the exhibit number, which shows the report on charge-offs and delinquency metrics. We can move on. Let's jump to the actual data. This document contains information about credit card, auto loans, and total loans, and it provides the net charge-off rate and the delinquency rate. This will give us a sense of how Capital One is doing in terms of credit portfolios. First up, let's look at credit cards. As of May, the net charge-off rate for credit cards was 4.54%. Now, what does that mean? Simply put, for every $100 Capital One's credit card business, next, we have auto loans. Their net charge-off rate here is 1.16%. Now, compared to credit cards, auto loans are looking healthier for Capital One. The delinquency rate on these loans is 4.45%. So although Capital One isn't writing off a ton of car loans, a notable chunk of people are behind on payments. Now, let's combine those numbers. When you look at all of Capital One's loans together, the charge-off rate is 2.41%. So out of all loans, Capital One expects to lose 2.41%, and the total delinquency rate is 4.03%. While it is only 4% for a company as big as Capital One, it could mean millions. And with that, we've reached the end of the report. That was a pretty concise look at Capital One's loan performance. Now let's zoom out and think about what this all means. And are these numbers good or bad? Well, it's all relative. We'd need to compare these with previous months, the industry averages, and their competitors to see if Capital One is doing better or worse than expected. It's also important to remember that these numbers are a snapshot in time. May, a single month doesn't make a trend. CLEP, what are the strengths? They're autoed in time. May, a single month doesn't make a trend. What are the strengths? They're auto the strength. They're auto, there are more loans, and that hurts their bottom line. And conclusion, this report gives us a peek into the world of consumer debt through others and their competitors to see if Capital One is doing better or worse than expected. It's also important to remember that these numbers are a snapshot in time. May, a single month doesn't make a trend. Claw the strength, their auto the strengths, their auto loan charge off rate seems reasonably under control for now. That could mean their underwriting, how they decide whom to give loans, is pretty solid in that area. A weakness may be the overall delinquency rate. If those rates continue to climb, Capital One is going to have to... What do you think about Capital One and their financial situation? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.